Good day, everyone. So let's continue our discussion on obligations of partners among themselves. So what if in case the partnership has suffered damages because of your fault or because of your negligence, and likewise you have brought profits and benefits to the partnership? Could those two be offset or be subject to compensation? Can we have it as we call it in our term, ay quits, or pwede ba yung i-offset? Well, basically, under 1794, damages suffered by the partnership through the fault or negligence of a partner are not generally subject to set off with the profits and benefits with that partner, which that partner may have brought or may have earned for the partnership because of his efforts. Why? The reason for that is because if it is the obligation of a partner to earn benefits and profits for the partnership, and likewise it is also his obligation not to cause damages through negligence to the partnership. So those things are two different distinct na mga obligations that cannot be subject to compensation or set off. So under the law and obligations as well, only a right and an obligation are required to be compensated, if you could recall that. So what would be the recourse of that partner who have caused damages at the same time bring unusual profits to the partnership? So he can go to court, or that partner can go to court, and then the court could mitigate his liability if in case that partner has brought extraordinary efforts in other activities of the partnership and unusual profits has been realized. So the basis would be the principle on equity. So let's continue. Another question is that who would bear for the risks in case there's a loss of the thing being contributed to the partnership? So it depends if what is being contributed to the partnership. So the first one, what if I contribute only the use of a specific and determinate thing, which like a car. So we entered into a contract of use of fracta. So in that case, it is the partner who owns the car who would bear for the loss of the car being contributed to the partnership. Why? It's because technically the ownership of the car has never been transferred to the partnership. What if what is being contributed to the partnership is a fungible or deteriorable na thing? So basically, it's the partnership would bear for the loss. It's because ownership has been transferred to the partnership. Why is this the presumption? It's because the use of the fungible or deteriorable thing would be impossible if it is not being transferred na to the partnership. What is then if what is contributed are merchandise? Well, basically in that case, it is still the partnership who would bear for the loss. It's because the firm intended to be the owner of that merchandise, or otherwise he could not make the sale of that merchandise. So what if what is being contributed is under the appraisal? In that case, it is the partnership who would bear for the loss because this has the effect of an implied sale. So basically, there was a transfer of ownership after the delivery of the things brought and appraised in the inventory. That is under 1795. So let's now go for Article 1796. What is the obligation of the partnership to every partner? So the first obligation of the partnership is to refund the amounts a partner may have disbursed on behalf of the partnership, plus the interest from the time the expenses were made. So let's say, for example, you have acquired supplies for the benefit of the partnership from your own personal money. So in that case, you could ask for the refund of such amount from the partnership. So if the partnership failed to make the necessary payment, then the interests is likewise applicable. Ano? So the next responsibility or the next obligation of the partnership. So other than that, what if thou, a partner then, who had advanced funds from his own pocket for taxes of the partnership land, it is likewise reimbursable by the partnership. So basically, that's a situation. What if na, if the firm is insolvent, then all the partners must reimburse that paying partner, except that he will no longer be sharing, kasi he would ili-lessen na natin yung kanyang share in the taxes out of the proportionate sharing. And then the second obligation of the partnership is to answer to each partner for obligations he may have entered into in good faith in the interest of the partnership, as well as the risks in consequence of its management. So basically, as an example dito ha, what if na you are required to deliver, you are to deliver for some merchandise of the partnership, and then it happens na nagbe-break down yung delivery truck. So while en route to the destination, and yung ginawa mo, what he did is have someone to fix the car. So you've inquired utangs or debts or obligations for the repair. So in that case, the partnership's interest account of the partnership, and it's done in good faith, then it should be a liability of the partnership that the partnership should pay, diba? So that's the second obligation. That's under 1796. So the reason for that, the partner is an agent that basically would bind as well the partnership. Let's now proceed. When it comes to the rules, a very important provision, the rules on the distribution of profits and losses of the partnership under 1797. So under 1797, although we are being presented with a provision, we could summarize this one later on. So the losses and profits shall be distributed in conformity with the agreement, if only the share of each partner in the profits have been agreed upon, and then the share of each in the losses shall be in the same proportion. In the absence of stipulation, the share of each partner in the profits and losses shall be in proportion to what he may have contributed, but the industrial partner shall not be liable for the losses. As for the profits, the industrial partner shall receive such share as may be just and equitable under the circumstances. If besides his services he is contributed for capital, then he shall also receive a share in the profits in proportion to his capital. So let's look at it. Let's summarize it. So the rules is that when it comes to the distribution of profits, it should be according to the agreement of the parties. If there is no agreement, then according to the amount of contribution. So yun po, that's very easy. So take note lang ha, when it comes to distribution of profits, if there is no agreement, capitalist partners, usually they are to receive in proportion to what they may have contributed to the partnership fund, and then the industrial partners, what is just and equitable under the circumstances. So meaning to say, so let's continue. What is the rules now, or what are the rules when it comes to distribution of losses? So in case of losses, according to the agreement, so the losses shall be distributed in conformity with the agreement, and if only the agreement pertains to the share of each partner in the profits, then the share of each losses shall be in the same proportion as to the profits. Take note of that, So the share of each losses shall be in the same proportion as to the profits. However, Again, the industrial partner shall not be responsible for the losses, if none, pa din according to the amount of contribution. But still, yun atin pong capitalist partner in proportion to what he may have contributed to the common fund, and the industrial not liable for the losses. Let's continue. Let's have industrial. So under 1797, take note, exempted si industrial partners losses from the distribution of losses. While he may be liable by third person, still he can recover whatever he is made to give them. So here under 1797 applies only to, ang losses kasi applies only to the partners, not when the liability is in favor of strangers. It's an obligation of partners to third person. So it means to say the industrial partner would not be exempted to that. Ano? So that would be, if that would be the case. What if the partners choose someone to designate for the sharing of profits and losses? Would it be valid? So under 1798, it is valid. Purpose of that, just to avoid partiality. So the third person basically is not a partner. But can you question or challenge a designation or sharing made by a third person? So under 1798, the designation of a third person may be impugned or could be questioned or challenged if it is manifestly inequitable. So in our terms, hindi siya makatarungan, ano. But despite being manifestly inequitable, you could not challenge or you could not question it when, if you as a aggrieved partner has already begun to execute for the decision, or you've received the sharing of the profits and losses, ano, or you have not questioned the same within 3 months from the time you came to know about the sharing of profits and losses as designated by that third person. So take note of that, ano. You should have to question the sharing or designation by the third person within 3 months period, or else you could no longer question it despite it being manifestly inequitable. So let's now proceed under 1799. Under 1799, what if daw a partner is excluded from the profits and losses? Would it be valid? So the general rule is that stipulation excluding one or more partners from any sharing in the profits and losses is void, because as what we know in our first time discussion, that the partnership is created for the common benefit. So in the profits and losses, everyone should be included, right? So except lang po ng atin na which under 1797, which specifically excludes an industrial partner from the losses. So if the law itself does this, a stipulation exempting the partner from industrial partner from the losses is naturally valid. Okay lang yun. So why under 1797 an industrial partner could be exempted from the losses? It's because daw yung labor naman na na-contribute ni industrial partner is not withdrawable na, or whatever efforts he have exerted into the partnership, while contrary to what a capitalist partners have contributed, basically money, well, it is withdrawable, ano. And moreover, in a certain sense, he has already have shared in the losses if the partnership shows no profit. So it means that his labor would be in vain. As an example, let's have an example for that. So here, A, B, and C were partners, were A, an industrial, and then during the first year of operation, the firm made a profit of 3 million, and during the second year, 1.5 million na loss sustained. Thus, the net profit of the 2 years is 1.5 million. So in the articles of partnership, it was stipulated that A, as an industrial partner, would get 1/3 of the profits, but would not participate in the losses. Is it valid? So we've discussed this one. Yes, the stipulation is valid. And then how much would A get? So basically that is 1/3 of 1.5 million na net profit. So here, why is it valid? It's because the law itself exempts, under 1797, exempts the industrial partner from the losses, so his share in the profits is presumably fair. A will get only 1/3 of 1.5 million, the net profit, and not the 1/3 of 3 million. So while it is true that he does not share in the losses, these only means that he will not share in the net losses. So it is understood that he shared in the losses insofar as these can be accommodated in the profits. It is but fair to compute all the various transactions in determining the net profits or losses.